everyone. Welcome back to yet another episode of Reinventing Finance with my lovely co-host, Tom. Tom, how are you?
Thank you, Nick. Very fun.
And as usual, we're not alone in our virtual echo chamber. We have Walter de Oude with us today. Walter, how are you?
Great. Good to be on the show with you guys today.
Likewise. I think we have, this is truly international, right? Dialing in from Hamburg, then dialing in from Zurich. Pretty close, but I think you're a little bit further away than Tom and I.
Correct. Singapore's on the other side of the world, the center of the new business.
Exactly. Walter, maybe for, and I don't think, I truly don't think it's that many that haven't heard of you and what you've been up to these past years, but, on the off chance, could you briefly introduce yourselves and, who are you and what the heck are you doing?
Sure. Nice to meet you, everybody. I'm Walter de Oude. I live in Singapore. I was the founder of Singapore Life in Singapore. I'm originally South African, but I've been living in Singapore and in Asia for the last 22 years. We built the Singapore Life business over the course of 2014, roughly, when I left my previous CEO job at HSBC. We started the Singapore Life business in about 2017 when we got all of our licenses and funding and everything ready to go. And we built that business into a real contender for market leadership over the course of the next 5 years. And now I've just stepped down from my roles at Singapore Life to start a new financial services company called Chocolate Finance, which I can talk about a little bit as well later on. I'm living in Singapore. I love it here. Singapore is my long-term home. I'm an actuary by training, so don't hold that against me. But it does mean that I have a reasonably good understanding of how these insurance-y things work, and it's served me quite well in the businesses that I've built so far. Nice to meet you guys.
Awesome. Pleasure to have you. And I think it could obviously fill one or multiple podcasts. We won't go into the Singlife story that much today. We want to focus a little bit on chocolate finance. But maybe before we jump right in, on your LinkedIn, you say, I think I am an entrepreneur again. Care to elaborate?
Sure. So obviously the first time I went down the entrepreneur journey was to start a brand new life insurance company.
As you would.
As you do.
As you do.
And I woke up one day and said, I was running a life insurance company for HSBC at that time. And I thought, I'm pretty sure that this industry could do with another player that does it in a slightly different way, which is what I did. So I built the Singlife story. Yes, of course, every good story has a beginning, a middle, and an end for entrepreneurs. And I got to the point where we had built the business to the extent that I needed to pass it on to new people to take it over and run it going forward so that I could do the thing that I really, really love doing, which is being in the weeds of startup and early stage companies where I think I can be more creative and add more value to the financial services sector. So in saying that I think I'm an entrepreneur again, basically I went through a hiatus during the last year of 2022 as I was still sitting as a director of Singlife, but thinking about the avenue for what comes next. As a director of Singlife, I have had the ability to initiate new projects as I went along. And so this new idea of being an entrepreneur again gives me the opportunity to build a new company, which I've now started called Chocolate Finance, which we can talk about a little bit more as we go.
May I just ask an additional question to Singlife, because you're let's say stressing that you're being an entrepreneur again. What are the main takeaways or lessons learned? Because I mean, there's a huge difference between, let's say, building structures for corporates, and then let's say starting something, let's say in this entrepreneurial let's say setup.
Yeah, look, I think every business goes through an evolution, and I think the one thing that happens to all startup businesses is that they become what they were trying to avoid, is that all successful startups become incumbents eventually, right? If you're not successful, you're not going to be big. And with becoming big, you catch up with all of the stuff that larger companies have had to deal with. So, you know, in the process of what I've built so far, you know, my background is I've been able to do big companies, small companies. The thing I really love is the early stage creative pieces, which has led me to the new chapter of Chocolate Finance. But to your question on you know, insurance businesses and where those differences came from, is our original thought for insurance was we needed to leverage two distinct, clear opportunities in the life insurance space that would present at the time that we started. One was that Singapore is a destination for wealth. Everybody loves Singapore. Singapore is stable. It's one of the best governed financial services markets in the world, or Asia, if not the world. Leveraging the Singapore brand in the way that we did for life insurance was a fantastic opportunity. And the second piece was that we were seeing this evolution towards digitization of financial services. We saw payments companies leading the charge. Payments, transactions, interfaces evolved very quickly. Banks became a lot more digital very quickly. But insurance companies were quite a long way behind. And that opportunity to refine the processes for insurance in a very happy way, help people love their relationship with their insurance company instead of seeing it as a chore or a necessary evil. If we could engage customers in a very positive way, there was a big opportunity for us to take market share and build a good kind of business. Yeah.
Can you also say something about the numbers? Because if you just watch, let's say, the figures on LinkedIn, it's a pretty successful and big company.
Yeah, that's right. So we were very fortunate from many angles. Obviously, it took us about 3 years to raise the capital that we needed to get going, and we needed to raise about $50 million to get started. And we built that from the course of 2017. We raised a little bit more money as we grew, because we grew pretty quickly. And we built some fantastic products, and I'll talk through some of that. But by the time we got to a point where we needed to raise more money, but then the Aviva business became available for sale in Singapore. And we did a really neat transaction where we valued the Singlife business that we'd built at about $500 million. We valued the Aviva business at 2.7 billion. So that's 3.2 billion in total. We did a big transaction where we leveraged the business by about 1.2 billion in a senior debt. We issued a bond and had some other forms of finance that come through the debt, and raised additional 750, or the rest of the capital from private equity and some of our existing shareholders to form a business which was technically valued at $3.2 billion. So it was a big success story for us along the way. But then the nice part for me was the entrepreneurial part of the journey, bringing the businesses together in the transaction that we did. Consolidated our position and gave us a platform for massive future scale and growth, which is exactly the right thing about what the businesses need, but is now a much bigger animal than what it was when we started.
And how many people work at the moment? Because LinkedIn, nearly 1,000 people, I saw.
Yeah, I think when we merged businesses, we were running Singlife in the early days prior to the merger with around about 95 people for a fully fledged end-to-end life insurance company, which is pretty lean for what we do, which basically showcased how well we did the technology and the automation of processes, because to do everything with so few people, it was quite a big achievement. But then bringing that into the much bigger conglomerate of Aviva and Singlife with Aviva, they had just over 1,000 people on their side. So I think it's now about 1,200 people across the businesses. Yeah.
Great. Thanks.
If we kind of, before we go into a different angle, I'd like to get your view about, is insurance broken? Does it need disruption? And are we,
Yeah, I don't think it's broken at all. I think everybody needs insurance. It's one of those necessary things you have to have. You have to make sure that your family is provided for in the case of your untimely demise, that you can cover your mortgages and do the right thing for the people that you leave behind should the worst happen. Everybody has cars and health and all of these things, which is important to plan for, and ensuring these things is fundamental to social stability. I think what we've found from insurance is that it has been a traditionally unwieldy product. A lot of advice and a lot of bad selling and difficult administration processes, and not necessarily the best value. But I think the evolution that has happened around greater levels of competition, greater levels of user experience, greater levels of customer engagement means that the industry continues to flourish and grow. It's still growing in every way, and everybody needs life insurance. So it's not broken, but I think it could be happier, is the way I would position it. Nobody loves their insurance company, but maybe they should.
Yeah, I mean, it's one company in the UK, and I don't think it would work that well with in Germany, because we don't have dark humor. Dead happy, which is, I thought, and they pull it off to make something that is not very happy. At least approach it with a bit of humor, because what do you have?
Well, that's right. So every company that gets born starts with a brand and a brand proposition. And so when we started Singapore Life, we were fortunate enough to be able to start a company called Singapore Life, which was an achievement in and of itself. But what we did from a branding perspective was to position relative to the strengths of what we had, and that was Singapore. Brand in our case was about safety, around security, Singapore being the optimal place for financial services, and we leverage that brand. Different companies find different ways of branding and positioning. You get product-centric brands in the financial services space. So things like in Singapore, we'd have Stashaways or endeavours, or which are startup businesses where the product, what the business does is similar to what the naming of the business is. You get different kinds of brands. The old-fashioned JP Morgans and Goldmans are human being brands. You get, the happy. What was it in the UK? You said happy.
Dead happy.
Dead happy. That's right. So Dead Happy is an insurance-y brand where it's a little bit producty, but a little bit fun, and a little bit more emotive. To create an engagement with customers is not just about having a good product; it's about a good branding relationship with your customers. And that's where my next project is called Chocolate Finance, which is designed to create a positive image of financial services, a positive brand which you like to deal with. And I think that makes all the more sense in the financial services industry.
So could you talk us through a little bit about what you're doing at Chocolate Finance, and which I would not necessarily attack vector, but where you position yourselves, what you're doing.
Yeah, it's very simple. So I believe that there's a unique need in the marketplace, particularly that has evolved over the last while in lower and slightly rising interest rates, is that every human being has a need for cash-like savings. And traditionally, banks have not been the best partners for managing your liquidity. Rates of return on your deposits have been very, very low for a very long period of time. And if you wanted to get slightly better returns on cash, you'd have to go into fixed deposits and lockups, lock your money away. So what Chocolate Finance is aiming to do is very, very simple. How can we give you fixed deposit-like returns, but with no lockups and instant access to your cash? People have got two buckets of money in their head. You've got the day-to-day spending money that you use. So you buy your groceries, pay your rent. That comes out of your traditional bank account, or you pay it on your credit card with whatever loyalty program that you prefer. But people have also all got this piece of cash that's sitting in a bank account somewhere, which they're actually unhappy about the returns that they're getting. They wish they were getting a bit more, but they don't really want to invest it into longer-term assets because of the risk or whatever else. But they just wish they were getting a little bit more out of it. So what Chocolate Finance is designed to do is to maximize the value that you're getting out of your cash, give you the liquidity that you need so that you can get access to that money at any point in time, and ultimately then offer broader financial services products in and around that initial cash offering. So that's what Chocolate Finance is going to do. Our ambition is to give you fixed deposit-like returns, with instant liquidity to your cash. No crypto, none of that stuff, just pure traditional financial services run through an asset management license to deliver a superior cash proposition.
No, awesome. I mean, I have that bucket of cash, when my I don't know, washing machine breaks down or I have a car repair, I'm not a financial advisor, but I read somewhere 2 to 3x of your net income. You should just stow away for some larger, and that just sits there. Now, probably right now, for a lot of people, there might be more cash sitting there because people don't really know where the markets are. And so I can see how that is a very relevant entry product. And I think there have been similar, I think you've had this kind of, not bait and switch, right? Like a good hook product, which creates trust, which has a reasonable high engagement, which other life insurance or investment products might not have, and that generates trust. And then you can offer more services around that. Seems to be part of your playbook here.
That's exactly right. It is a mono solution. We are focusing very, very hard on optimizing cash and doing that incredibly well. Managing the liquidity and everything else that is a financial engineering exercise to get it done the way we consumers expect, which is instant access to your cash plus the stable returns of what you need. And that's what we're going to do. And there's a whole business model that surrounds that.
And just out of interest, how come you go for retail customers rather than, let's say, commercial or SME customers? Because I know I have cash lying around, but I also, don't put that into long-term assets.
Yeah, I think this is a retail opportunity, or it's a problem that every retail customer has. I have this problem. I love investing in businesses where the solution that the business is offering addresses a specific need that I specifically have. And I wish that my own cash was earning a little bit more money. And I don't think that the better cash return should be limited to wealthy people or institutions only. That said, in order to do this at scale for retail investors, there's a lot of governance that has to sit around that. So we will support the returns of consumers' cash returns up to, say, $20,000. And above that, then it'll be a little bit more market related in terms of the returns that you get. But the important thing here is that there should be an everyman, everybody product. There should be no restrictions on anybody being able to access a slightly better return on their cash if they look for it. And of course, my background is as a retail guy from an HSBC original perspective. The life insurance is a retail business. The success of Singlife was a retail offer. We've become very, very good at how we present products, uniques, and solutions to customers in a retail way. We're very, very focused on third-party advocacy of our solutions, direct marketing, all of that stuff to make sure that these products are available to the mass market and to do it in a good way.
I mean, you talk in a very modest way, which I like actually. But let's say you did a huge job with Singlife. I mean, it's not just easy, just let's say to get Aviva on board and then do a merger. And the second thing, you do it again now. I mean, how did you get Sequoia on board? I mean, everybody would like to have Sequoia on board if you're raising money. So, so there must be more behind this, let's say, very modest way of talking about the business.
Yeah, look, I think raising money is probably the most difficult thing that any startup company can do. And I think the timing at the moment is also very difficult for startups in the capital markets, given where venture capital is and where valuations have gone on these kinds of businesses. Raising money is tough. The first time I raised money for Singlife, it took me 3 years to get done, and I almost died. You sell your assets, sell your cars, move into smaller apartments and all that stuff to survive. But you get there. I think for Chocolate Finance, it's a different story. It's
Correct, yeah.
a little bit luckier. I'm in a very fortunate position to be a second-time entrepreneur again. And I didn't screw it up the first time. So this time, I have been lucky enough to have had support from some of the bigger players in town who are equally excited about the proposition. You know, I did a presentation at the Singapore FinTech Festival on raising capital. And my key storyline there was about having a really good story that you're telling in your capital raising ambitions, right? And there are a couple of key factors there. Number one, you have to have a product which is useful. If you can't have a useful product, you're not going to raise capital. And you have to have an ambition. If you, for the Sequoias of the world, you have to have an ambition that you can do something that is truly scalable and truly long-term magnificent. And if you can present these kinds of opportunities in a way that kind of speaks to capital providers, you can see these as attractive opportunities. Of course, some other investors see it as, you know, a little bit more risky or whatever else. And you know, there are other opportunities, or, you know, I'm at the end of the fintech cycle, so to speak. But I'm very fortunate that I've had you know, a lot of faith put in me by some of the people that have backed with Sequoia in the lead, and not to undermine the others, well, just with all the others that have come on board as well.
Is this presentation online?
Yeah, I think you can find it on.
Okay,
on
then
YouTube.
we perhaps could edit to because that's, I think, let's say, I mean, there's a lot of discussion always about raising money, and I mean, it's very normal that, let's say, from an investor's point of view, you search for people who already did one successful, let's say, company, and you did. So I think there's a combination of, on the one hand, your lessons learned, and on the other hand, then, okay, you're doing it over again, or you try at least to do it for the second time. So I think a lot of people who are also in the same situation in this fintech field can learn a lot by just listening to this kind of presentations. That's, I was just asking for that. Thank you.
Yeah, sure, it's there, and I search for Walter de Oude, Singapore FinTech Festival there somewhere.
No, I think I'll paste it in the show notes. I've had a look at the pitch. Walter, I would say maybe, because I mean, this sounds really, really great, and some of our listeners work in incumbents, right? And I guess, but you know, some are the CEOs, some might be an executive, and some are other insurtech or fintech founders. Do you have unconventional advice? Because the standard advice, I think we've heard before, and you know, but do you have any unconventional advice for each of these different groups? If you were on a golf course or in a pub, and you'd say, listen, this they didn't tell you, or this you hear, but you don't believe, you know, this was something that I learned the hard way, that some of our listeners and viewers might benefit from.
Yeah, so look, I think in any business, you've got three key metrics, right? One is revenue, one is cost, and the third is profit, right? And so each of those three metrics have got activities that work around them. The revenue metric is all around distribution, customer engagement, solutioning, technology, and UX and experience and efficiency. That's not necessarily a product-led thing. But the advice on the revenue is sell a product that people actually want. Too many times insurance companies and others sell products that they think that they can sell, or sell products that have bells and whistles and differentiators, but actually to be close to the customer and understand what customers are actually looking for is the best way to activate revenue from a revenue side. Cost, yeah.
May I just ask, and I think this sounds, I've been in so many of these, design sprints, design thinking, BS things, right? And everyone.
Yeah.
Now, what that means, I guess the question here is, everyone says yes, but because it's a new product, it might actually be something that you cannot easily manufacture or produce yet. So if I'm hearing you correctly, it's to say, let's say your product, for example. Yeah. If you think that you have a customer and that I'm not an asset manager, it's like, doesn't matter.
Yeah.
What you're saying is, Rather focus on a product that people actually want and become what you need to be in order to sell that. Because, you start with a napkin,
Exactly.
and build back from that. And I think that's what people, it's like, but we're not in the business of. No, you are in the business, and always originally you started in the business of solving a customer problem. And then something happened, you were successful. And then these other things came. But is that a fair addition to what you're saying?
Fair. That's absolutely fair. In most incumbent businesses, we've got too many people in these organizations whose job it is to say no, right? Oh, you can't do that. The regulations won't let you do that. You can't do that. We've been doing it this following way for the last 100 million years. This is too difficult. This is too hard. This is going to impact jobs. Those people are bad for organizations. If you find a product solution you find a problem that you have a remote possibility about providing a solution for, you then figure out how to, within the ambit of regulation, within the ambit of the technologies that you have, to solve it, and go out and do it, and fire all the people that tell you can't.
And just to that point, because I think it's in any company, right? I, for one, we have the same thing. We all, you're so proud. You finally cracked it as a startup. You finally got your first customer and you have the product, but it might not scale as much as you can. But you finally have this version, and you think now is the time. But market moves on, and if the problem that you're solving, if you see a different problem, you should reinvent yourself continuously. Absolutely. Based on the problems that you see, and without betting the farm. And there's it's not black and white, but this is ultimately what you're saying, and I think that is more profound than solve a problem, because everyone said, yeah, let's solve a problem, but then they don't.
That's right. And if you can get to the stage on the product side where most of the value that you're creating through the product is actually going to the customer, then that becomes a much more attractive product than a product where the value that's getting created is going to either shareholders or distributors, right? So, and when it comes down to scalability, it's much more easier to scale a product which is valuable to customers than a product which is less valuable to customers. They say advertising is you need to advertise things that that don't necessarily sell themselves. So rather spend the money on making a good product that customers actually want, rather than pad it up with advertising on a product which is less valuable, if you know what I mean, from the economics perspective.
The thing is that let's say the last that's 10 years were not a normal economic situation. So there were a lot of products which normally wouldn't survive, but because there was just too much money around, a lot of products which didn't solve anything also got high valuations, and now we're going back to normal. But in the end, on a long-term perspective, you can only survive if you add something, if you add value to the customer.
That's right.
The best example are those people driving around with bikes and then transporting 1 liter of milk or Coke through a city. If retail has a margin of 2% on the revenues, how will you ever survive with such a business model? You're not going to survive with that. But in these crazy times, a lot of stuff was possible.
That's true.
And we just don't realize this. But we're going gradually. We're going back to normal. Party is over, so to say. And some people got an enormous amount of money for stuff which in the long term is not sustainable.
That's exactly right. And to my point on the every business has these three things: revenue, cost, and profit. And profit is fundamentally the most important thing to raising capital and sustainable businesses, because you can't just build WeWork over and over again.
Yeah, that's correct. Yeah, good example. But that's why it's also so important to dive into those companies which are built and not so much into the limelight all the time. And the more complex it gets, and life insurance is not one of the most simple topics, are just, to my point of view, just totally underestimated. So you see an enormous amount of media attention for stuff which is quite simple and doesn't work. And on the other hand, you don't read that much about stuff which is really complicated and did work.
Yeah, the message I would just say is the simple stuff is the better stuff. The more complicated it is, the more difficult it is to explain. And generally, the
But
more
life
things
insurance is
go wrong.
complicated. So what you built is complicated.
Not really, not really.
Yeah, I mean because
Not really.
you have this background. But let's say just building an app and selling something is different from building a life insurance company.
Not really. Life insurance is
No,
very simple. You
you
pay a
find it very
premium.
simple. Okay.
You pay a premium. If you die, your family gets some money. If you don't die, that's probably better, right? It's a very simple product. It's just about selling it in a nice way.
Okay, let's put it like that way. It's something which is, let's say, behind the scenes complicated, but you have to explain it in a simple way, and
That's right.
that's probably the
That's right.
combination, and that's why I also asked you for your presentation, because I think that's vanilla on the cake, to be able to keep stuff simple and explain it simple. Doesn't matter
That's
if
right.
you explain it simple
And the
to your
same thing
customers.
applies to, say, my chocolate finance business. The simple thing that we're doing is giving you
Yeah,
a fixed deposit like return with no lockup. But
yeah,
behind that, there is some quite complicated financial engineering which has to be done in order to
yeah,
deliver the returns in a stable,
yeah,
liquid,
correct.
long-term way.
Yeah,
But the customer proposition gets what he asks for, which is a stable fixed deposit like return with no lockup.
yeah, that's correct.
You mentioned revenue, we've mentioned profit. So in between sits costs. Do you have any additional, because you said these three things, was there any unconventional or very conventional insights on that particular part of the equation?
Yeah, the cost. You can't do anything without spending some money. The question is, are you spending the money on the right things? Generally, I find that people cost is the hardest cost to manage because it's emotional. You've hired people along the way. You have to redesign businesses. Sometimes means you have to redesign how they function, which sometimes means that transformation needs for certain people to leave and certain new people to come. And as you transform these businesses, sometimes the biggest blockers of transformation are the people that stand to lose the most, who might be the people that might be displaced if, say, a process gets digitized or an old channel gets removed in favor of a new channel. So managing costs is really, really tough. But it does have to come with a certain level of ruthlessness of it. Early stage startups that get a lot of funding you say, oh goodness, I have a lot of money. Let me go and find a nice office and hire a bunch of expensive people and put up some very nice panels on the wall. Where in fact you're much better off staying in a very small, efficient environment. And when you're hiring people, what we do is you find one guy that's awesome that can do three people's jobs well. Because the cost of people is exponential. In all businesses, one person plus one person does not equal two. It equals about 1.5, because as you lose a lot of communication and information in between, 1 plus 1 plus 1 is nowhere close to 3. It's maybe just over 2. 1 plus 1 plus 1 plus 1 is maybe just over 2, if you know what I mean. And as you get to 1,000, you actually can do the same thing with 100 people. Businesses, as they scale, sometimes build this cost infrastructure, which is not necessarily always necessary, but it becomes a little bit historic in its nature. So cost is important.
So,
Yeah.
okay, and from that, you would say hire for quality, but in a way you kind of start with experienced generalists is kind of what you're saying, all things considered. Maybe not, maybe on the actuarials, depending on the function, obviously, but I think also people who are willing to get their hands dirty and then potentially grow into it, right? That's one of the things you're saying.
Yeah, so like what I do with chocolate finance is the people that come in they have to meet a couple of criteria in my world. The one thing is they have to be ambitious, like seriously ambitious, not necessarily in their own personal, I need to be the master of the universe, but ambitious to build a product which is awesome, right? They need to be hungry for learning and have the ability to absorb new things. In startup world, where you are reinventing things a lot of stuff doesn't come from experience. It comes from learning as you go, from making a couple of mistakes and picking up the pieces as you go. So you want guys in the team who can have a very generalist oversight based on relative experiences across the various components of finance, tech, design, product, and then have these guys work very closely and tightly together with an ambition to improve the benefit of the firm, knowing that their own value is going to generate value as the firm improves, rather than just be old school guys that have been doing one thing one way for a million years. I found that having generalists who are smart as smart can be, that have the ability to learn as they go, are the best guys ever, because they get personally motivated by the fact that they are building new stuff and learning and growing from a human improvement perspective, but actually being trusted to deliver, make mistakes with me or the others on the team, giving oversight and guidance as we grow. But you can really get a lot of great work done with a very small number of people if you structure it well.
Would you, you've used the word kind of ruthless, but I think it's, it ultimately gravity hits, right? I just, out of curiosity, your view on Netflix has been quite prominent on their culture. They proposed this thing, you kind of hire and fire people for the specific role. You're very open about it. Do you, in your view, do you think that, are you more on the kind of transactional side? Listen, I'm providing you this thing, you provide, you grow, that's fine. Otherwise, there's the door, no hard feelings. This is this will always be a very good experience. Or on the other extreme, to say, our goal, relationships matter. Churn is also really expensive. Trust is also important. So the impetus would be to say, listen, we need to evolve. You also need to evolve. Here's a chance for you to grow into this. I'll put a chance on you because you've kind of came with me. And if it doesn't work out, then we'll obviously need to part way. Do you have a specific tendency? Both have pros and cons.
Yeah, look, the best outcomes come from loyalty. Loyalty both ways, from the people that I bring into the team and from me to them and them to me. If we're working well together in a loyal, everybody benefits from the end outcome. You get the best out of everybody. So my view is, not everybody is an exceptionally perfect person in any one role, and the business has changed so quickly that you can't categorize and peg people to, here's your job specifically, and that's what it's going to be for the rest of your job. You're going to have people that are generalists, that are super smart, that can take on the evolving, changing business needs as and when they need to. When I was commenting on, where do you find talent as an incumbent company, my answer is always the same. I think every company has talent within it. Generally speaking, a lot of companies tend to lose their talent into these siloed approaches to say, your job is this, don't ask any questions, just do what I'm telling you to do. Whereas, in fact, if you could allow these talented young people to use their various experiences to step up and take ownership of the delivery of what they do, even if they are a little bit in the deep end of the swimming pool, deliver such amazing results that everybody benefits. And if the loyalty works and the trust works, where everybody knows that the business is going to amplify because of the joint collective hand-holding of everybody in the organization, which is less individual and more communal, everybody benefits. But where the cutoff comes is where someone is not reaching the standard of
Sure.
general competence. It's not about a specific role. It's more around are you, when you wake up in the morning, do you wake up and say, yay, I'm going to work today? Or is it, oh, crap, I'm going to work today? The guy that says, oh, crap, I'm going to work today, I don't care how good he is, I don't want him on the team,
No, I think that's. I was just curious, and I found that one thing I can say, at least in a lot of the discussions that I've had over the last 5 to 7 years, loyalty was not mentioned so often in startup world. People felt, it's the it's like the mercenary approach has its ups and downs, has its benefits for certain things, but then you'll get what you give in a way. So thank you for elaborating.
And the loyalty goes top down first. Yeah, you got to be loyal to the guys that you bring on board, because you're committing a future which is uncertain to people that may or may not benefit from the outcome, but so you have to carry everybody with you on that journey.
And those people also have other opportunities.
Absolutely.
And other obligations, so but no, I think that's really even though it's old school, I find, because if I were to talk to my dad, who I think in VC land would be a lifestyle entrepreneur, didn't feel like a lifestyle just because he didn't get any funding. That was very much something that he felt obliged, and loyalty was definitely something that he would provide and also request. And maybe it felt like that particular ingredient seemed to have been lost on the way for some. Conscious of time, and there's so many questions I wanted to ask you, but we won't get to it, Walter. One final question before we wrap up. You've been interviewed before, and you talk to people. Is there one aspect that you feel is not talked about enough, where you think this is actually a question that should be asked more? If so, this could be a way to ask that question and give a prompt answer for it in the same time.
Well, I don't know. There's so many questions and so many answers. My view on, look, I'm a startup guy. I love the idea of creating new things. I'm happiest when I'm in the sandbox playing with my Lego, trying to build a better thing. The question is always, how do you do things that no one else has done before? And the answer is, well, if there's a consumer need for it, you find a way. You navigate through the regulation, and you navigate through the technology opportunities, and you stay 100% on top of what's new in the marketplace, what tech is available, what people are doing. How do you make sure that you can differentiate and evolve quickly as you grow? So, what question would I want to answer? Well, I don't know, but Douglas Adams says the answer is 42.
Yep. Yep.
It's an ongoing discussion, but it's what I find interesting is that we're gradually coming back to normal, and I think it's also an introduction for let's say especially enormous amount of European entrepreneurs to dive more into for instance also your story. That's why I'm also asked for your pitch, etc. Because what you see just in general is that in Europe we are very much focused on the one hand on Europe and on the US, and we are not so familiar with, let's say, the success stories in Asia. So I really liked our conversation very much.
No, thank you. So Chocolate Finance will launch its Singapore business probably in about April of this year. We have expectations and intentions to expand that proposition outside of Singapore, and Europe is certainly on our roadmap.
It's also perhaps something which Nick and I have to take also to DIA. I don't know if you're familiar with them and their planned conference in Barcelona, because I think the fact that they have become a global organization now is also a chance for more of, let's say, this kind of international exchange of ideas and lessons learned for everybody would make this kind of conferences much more interesting in the future.
Sure.
Awesome. Tom, Walter, thank you so much for your time. Unfortunately, time's just about up. And thank you so much, and greetings to Singapore and Zurich.
Thank you.
Thanks, guys.
Thank you
Have a
both.
great day.
Bye.